an audit and assurance. Yeah, so right now the discussion, as we said, it's going to be quick revision. It's going to be quick revision of Ind AS 37. Ind AS 37, as you know, it talks about provisions, contingent liabilities, and contingent assets. Yeah, not only that, it talks about other three more topics. Yeah, that is a one, reimbursement of assets. Yeah, means if someone has to pay me, can I recognize it? I spent on behalf of the other party. Can I recognize that it is a receivable asset? That is one. Restructuring program. Yeah, in case of if the company has taken a decision for restructuring its business, so are they supposed to make any provision? If they are supposed to make any provision, whether it should be, what are the conditions? Like, is it what are the other conditions with respect to Ind AS 37? That is also going to be discussed. And the last topic is going to be onerous contracts. Onerous contracts. Yeah, what is onerous contracts? What is the provision? Let's have a quick revision of entire Ind AS 37 in this 1 hour session. I think almost all important points I'm going to cover it in this session. Yeah, before get into the main topic, yeah, there is a small information. This is ACE with Ashes. Yeah, we actually started our batch. I started my batch of financial reporting on Unacademy platform. It is 100% English batch, comprehensive batch, which is started on September 16th. Yeah, we have the classes like morning and evening, which is morning 6:30 to 9:30, evening also 6:30 to 9:30, like daily 6 hours class and 50 days. So it's going to be 300 hours of detailed discussion of financial reporting, which is on Unacademy platform. Yeah, as you know, Unacademy platform, right? You can attend the live classes in the given timings, and if you are not able to attend due to your office or whatever the reason, you can subsequently watch during your subscription period the recorded classes. Yeah, and we are going to cover 100% ICA material. Yeah, and your previous exam questions, RTP questions, mock question, everything, because 300 hours is not a small amount of time. You can cover each and every point of it, right? Another teacher, who already started, right, corporate laws, corporate and economic laws, on August 16th he started. That is Mr. CA Abhishek Sharma, right? His classes also morning and evening. Yeah, obviously timings are different, right? Those classes are also available. My other classes, which is GFRS, which is already completed, started in 21st July. I took approximately 24 days. Yeah, 24 days class, 74 hours of class. And again, here also everything is covered in ICA material, previous exam, mock, everything was discussed in the class. Detailed discussion took place already, right? So these recorded classes are also available. This is page number 13. Give me a second. Done. Yes, my dear. So this is from the quick revision fast track chart book on financial reporting. Entire financial reporting related, all the information is available in the book. So for the revision purpose, yeah, this will be very much useful. You will see now with respect to one standard. Yes, obviously you can have a look at it here. And with respect to another, I'm going to have one more class, that is 12 to 1 o'clock. There Ind AS 20 related we'll be looking at. Tomorrow also 2 classes, 2 standards, quick revision will be taking place. All these revision classes are going to be obviously helpful. Okay, right. Chalo, let's get into the subject. Chapter number, in my book, that is a chapter number 3. That is Ind AS 37, provisions, contingent liabilities, and contingent assets. Yeah, as I said, each standard is going to discuss, this standard is going to discuss another 3 more topics which are not there in the heading. Yeah, one is reimbursement of assets. It's a small one, correct? And what is that? Restructuring provisions. It is another small one. Last one is onerous contracts. Yeah, on this actually recently also there is a question on onerous contracts in the last examination paper mein. Directly, indirectly they will be asking you, right? They may not be asking straight away a question from Ind AS 37, but it is very much important because it is linked to many other standards. Correct. Next, what is this? Standard is not applicable. Standard is applicable. It is not applicable for what? Yeah, we said very clearly here. It is not applicable for. Yeah, what is it not applicable? Yeah, it is not applicable for financial instruments. Yes, it is not applicable for financial instrument because financial instruments are handled by Ind AS 109. Correct. That's why this is not applicable here. Yeah, next, executory contract. What do you mean by executory contract, my dear? Executory contract means where, contract means there are two parties. Yeah, both the parties have done nothing or both the parties have done same level of job. Say example, I entered into a contract with you saying that I will purchase your goods. Yeah, what did I say? I'll buy your goods. Fine. For how much? Let us say 1 crore. Done. I just entered. It's a binding agreement between you and me, right? That means I have to buy, you have to sell. Excellent. But as on 31st March, right, you did not give me the goods. Correct. Now you did not give me the goods. I also did not pay any money to you. Correct. So both of us have done any job? Nothing. We didn't perform anything. One, that is executory contract. Or as on 31st March, you already supplied me 20 lakh worth of goods. I already paid 20 lakh rupees also to you. Okay, right. So we did equal level of job. Correct. So what is, you gave 20 lakh goods, I paid 20 lakh rupees money. The job is done. So either we have done nothing or either we have done equally, the performance is done. Then it is called executory contract. Yeah, with respect to executory contract, nothing is there to recognize. Correct. Now what is there? I am not liable to anybody as of today. That's why it says scoped out. Executory contracts are not there. And the provisions which are already covered by other Ind AS. Yeah, are you getting my point? Provisions which are already covered by other Ind AS. Say example, Ind AS 19, employee benefits. Provision for gratuity. What did I say? Provision for gratuity. When I say provision for gratuity, there is a separate standard which is Ind AS 19, employee benefits. Then one has to refer provision for Ind AS 37, Ind AS 19, not Ind AS 37. When there is a specific standard, one has to refer the specific, not this general standard. Okay, provision for a tax. Yeah, Ind AS 12, it talks separately. Correct. Next, a provision with respect to business combinations. Provision for contingent liabilities with respect to business combination. Even though it is a contingent liability, with respect to business combination, if there is a present obligation, you are supposed to recognize it. You are supposed to recognize it in the books of the acquirer. Why? That is said by the Ind AS 103. Specifically said by Ind AS 103. Under that circumstance, don't come to my standard Ind AS 37 ko nahi aana. Okay, right. Next, what is a provision? Correct. Now we are talking about provision. This in this big standard may, the important and which will take time is only the word provision. Yeah, what is a provision? Provision, what they say, provision is of uncertain timing or amount, not and amount. Yeah, provision is uncertain amount of timing or amount. Got it? Yeah. So uncertain. What is uncertain? How much I will pay? I don't know. Or I know how much I will pay, but I don't know when do I pay. Is it at the end of the first year or second year or third year? I don't know. Then we'll call that is provision. Yeah, when I say uncertainty, correct now, when I say uncertainty, that means what are you supposed to do? I don't know exactly how much. That means there is an estimation is required. There is an estimation is required. When I say there is estimation is required, correct now, that is not small amount of estimation. We can say significant degree of estimation. Significant degree of estimation is involved with respect to a provision. Okay, sir. Then what do you mean by liability? Yeah, there is a definition. Even though there is a change in the conceptual framework, but this definition of liability in Ind AS 37 is not amended. Yeah, you are aware, right? What is aware? What you are aware? There is a change in the conceptual framework recently. Yeah, recently in the maybe some 3-4 months before, we got a notification. MCA notification has come with respect to amendments on Ind AS. But out of that, The conceptual framework only is the major change. Rest of the things are very light changes. Correct. So even though liability definition changed, but that liability definition under Ind AS 37, they have not touched it. They kept as it is. So our old definition of it is a present obligation. What is a liability? Liability is a present obligation arising from the past events. Expected future economic benefits outflow on settlement. Yeah, what did I say? It's a present obligation. Present. Today I am liable. Why you are liable? Because we did something in the past. What did you do in the past? Yeah, I bought the goods from someone. That's one reason. Could be. Right. And the other thing, I took a loan from someone. Yeah. I got services from someone. Correct. I promised someone that I will provide you warranty service. Correct. So it's a present obligation. How you say present obligation? It may be because of the contract what you have entered. That's why we say in simple words contractual obligation. Or correct. Say if you say provision for tax, even though standard is not applicable, just example, provision for tax. Are we liable? Is there any contract between me and government? Obviously no. But a legal obligation. Correct. And one more thing is there is one more word. What is that? Constructive obligation. What is constructive obligation, my dear? Constructive obligation is like self-binding. Yeah, well, what is self-binding? Our business practices, our actions, correct? Now, these are creating a valid expectation in the minds of the other party. These are creating a valid expectation in the minds of other party that we are going to satisfy, we are going to do our job, we are going to respond, we are going to settle it. Right? Say example, simple example, I'll close it. Bonus payable. Yeah, you know Bonus Act, it is applicable to whom? Bonus Act is applicable not for every employee. It is only applicable for if your salary is equal to or below 21,000. Yeah, suppose my salary is 1 lakh, sir. Then I am not governed by Bonus Act. That means my entity need not pay me bonus. That is up to the wish of the entity. Correct? If they want to pay, they will pay. But they are paying for all these years from the day of the company birth to till date. Every year they are paying the bonus. Then are they supposed to make a provision for the same? Must. Why? Because of your practice so far. Correct, na? And that is giving an expectation in the minds of the other party. Other party is nothing but employees, that this year also we will be getting the bonus. Like that, number of examples are there practically, for which this is called, I told you na, which is creating an expectation in the minds of the other party, is called constructive obligation. Yeah, so you have a present obligation because of the past event. Very good. And on settlement of which, when I say settlement, yeah, that is payment. Yeah, what is going out? Future economic benefits are going out. What is future economic benefits? Future economic benefits are cash, or that is money. I can say in simple words, money or money's worth. Yeah, that is money or money's worth. Yeah, money or money's worth will be out from your pocket. Yeah, at the same time, when I say obligation is nothing but duty or responsibility. Okay, which is arising from any of these activities I said. Yeah, and we have given a definition, simple definition for constructive obligation. Next, I said past events. Past events are what? Past events are obligating events. What do you mean by obligating events, sir? It is obligating me. I cannot skip my responsibility so easily. I have to do something to get out of this. Okay, done. Next, what are the general conditions? What are the conditions of liability? Liability, not just a provision. We have two conditions to recognize a liability. One is probable future economic benefits outflow. And the second condition is it should be measured reliably. These two conditions are already there for a liability. But in this standard, what they have done? They have added one more condition. What is that? That is nothing but they have picked it from the definition of liability. What is the liability started with? Liability is a present obligation arising from the past events. Exactly, the first line is been copied and kept it as one more condition. So To recognize a provision, you need to satisfy three conditions. To recognize a provision, you need to satisfy three conditions. What are the three conditions? Present obligation arising from the past event, probable future economic benefits outflow, and it should be measured reliably. It should be measured reliably. Then yes, you are supposed to make a provision. You are supposed to make a provision. Otherwise, provision is not required. Yeah, I have given some of the examples here. You can have a just look at it. Provision for depreciation, I said. Provision for depreciation. Provision for depreciation, is it a provision, my dear? Is it a provision? It is not a provision. Is it a liability? Do I need to pay to somebody, to the machine? Not. That's why a provision for depreciation or provision for doubtful debts, we use the term provision for doubtful debts karke we use it. But you look at your schedule 3. Okay, right. If you don't believe, you look at schedule 3. In schedule 3, under the debtors heading, you see it, my dear. You will not find the word provision. You will not find the word provision. You will find the word called allowance for doubtful debts, allowance for bad and doubtful debts. This is the language used. This is the language used in the schedule 3 itself. Schedule 3 division 1, division 2. Both the things, both the schedules may used word is allowance, not the provision. Because provision is a liability. Am I liable to a debtor? How come? That guy has to pay me. He is not paying me. Then well, why will I say I am liable? You can tell what is my receivable is less. It is not a liability. Correct? It is receivable is reduced. Receivable amount is reduced, but not correct. It is receivable amount is reduced, but it is not a liability. I hope you understood. Next, provision for rent payable. Can I say? No, you shouldn't say. Why? Provision for rent payable, salary payable. Arey boss, you know na how much rent you are supposed to pay, how much salary you need to pay. Don't you know like how many number of days March month mein employees have worked for? What is the rental amount payable as per the agreement? I know very clearly. Then why should I say it's a provision with uncertain amount? Where is uncertainty here? It is very clearly, known. So these are supposed to be called as accrued liabilities or outstanding liabilities, but should not be called as provisions. That's why if you have seen the financial statements of any company, in auditing time articleship you must have seen it. These things will be accrued or outstanding liabilities. Other current liabilities may will book it under, but will never book it under provision heading. No, it is not. Correct, na? Right. So there are so many examples. Have been provided here. Let's see one or two kind of things. Yeah. Any future operating losses? Let me take up. Yeah. Shall I make a provision for the tomorrow? Next year. I am thinking Corona as in the current year. I am expecting next year also I am going to make 5 crore rupees of loss. So shall I make a provision now only? Shall I make a provision now only? What do you say? You can write it in the comment box, chat box. Yeah, let me also see what is that your answer. Just generally, whatever it is, whatever you feel you answer. Shall I make a provision? I am expecting that next year due to Corona I will be making. Assume, let's not expect that Corona will continue. Okay, due to whatever the reason, I am going to get a loss of 5 crore rupees in the next financial year. I am expecting that. Shall I book a loss in the current year as a provision now? No, you shouldn't book. Right? You should not book it. Why, sir? Arey boss, it is a loss related to next year. Correct na? Today are you liable? If you say you are liable, my next question is to whom you are liable? Correct na? To whom you are liable? When are you going to settle it? It is not something I am going to settle it. I am not liable to nobody. Correct na? If you can't understand it in the straight fashion, what is that? To whom you are liable? Other way around you think. Who can come? Correct na? Who can come and ask me? Kya bola? Who can come and ask me? Hey Ravi Kanth, you pay money now. Correct. Who has right to? You understand my point? Who has right to ask me money? Nobody has a right. When nobody has a right to, then why should I say I am liable to somebody? That's it. I am not liable. Got it? Right. Look at the next small one. This is warranty provision. When I say it is a warranty provision, correct na? When I say it is a warranty provision, just a second. Sorry. Yeah. Warranty provision. Yes, I promised to the employees, correct na? What is that I promised? I said that I will serve you for the, I sold you goods today. Now in 1 year time, if you get any problems with my product, then I am here to serve you. I made a promise. If my company does not do, customer can go to court of law. He has a right to go to court of law and he can enforce it that I have to serve him, because already I gave a warranty. I mentioned it in when I am giving the product to the other person. Yes. Is it probable? Yeah. Any product you sell in the country, in the world, correct na? iPhone you sell, or is one more correct na? Microsoft product you sell it, warranty won't be there. Warranty problems will be there all the time, correct no? Any mobile you purchase, is just example, there will be a problem. If not for you, yeah, others must have faced the problem, correct? So you cannot say because of this I don't expect any outflow. Pakka outflow will be there. It is very much probable to lose money. Next, can you measure it? Yeah, based on experience. Any day it has to start with some number. Subsequently, we will develop the policy. Correct? Na? It's like that. Next point. What do we say? Building restoration to original condition. Yes, very important. Building restoration. Yeah, I have entered into this building. Yeah, suppose owner is asking me, "Arey boss, if you want to make any changes to the building, make the changes." Excellent, sir. We'll make it. But owner is asking, "Arey Ravi, if you want to break one wall, break it." Super. But when you are going after 4 years time, na, you construct the wall and go. Okay. So when he says that I am supposed to construct the wall and go, that means the minute I take out one brick, I have an obligation to put the brick back. So that means I have an obligation. When it came, the minute correct na? The minute I have removed the brick, I got the obligation. That's why you are supposed to, right? You are supposed to make a provision, right? And we are going to tell you that it is going to be in present value. Yes, right? So many are there. We cannot complete it if you take up every example. Correct na? Right? Let me go ahead. How do you measure it, sir? Yeah, its standard has given very best thing, right? You should apply the best evidence available. When, sir? At the time of preparation of financial statements, my dear friend, remember, but not on the date of balance sheet. Say example. So I am preparing, sir, in the month of August financial statements. That date estimation, what is the estimation that you are supposed to take, my dear? Not on 31st March. Correct na? Maybe on 31st March you are expecting something like 10,000. Maybe on 15th August you may be expecting no 15,000 10,000 15,000. Then go back and record journal entry for 15,000. End of the day your liability should be 15,000. That means he's asking indirectly, consider the events occurring after the balance sheet date. That is the next line. Consider the events occurring after the balance sheet date. Yeah. And next, management experience. Yes, independent expert opinion. Yeah, with respect to legal cases and all, say I'm an accountant. I know debit credit. Yeah, basically, I don't know whether we will win the case or lose the case. Such things. Obviously, how am I eligible to judge? Now I asked my lawyer, am I going to win the case? Yeah, if you say yes, you are going to win the case, then don't need to make any provision. If you say you are going to lose the case, then you have to make a provision, right? Next, one more point here. Generally, like say, our lawyer is saying, what is our lawyer saying? Sir, 80% chances, sir, 80% chances you are going to win. Yeah, he says 80% chances to win. Excellent, sir. Thank you, sir. Correct, na? Excellent. But when I say 80%, lawyer is not a god, no, to confirm something. Obviously, yeah, I agree. He's expert. He knows much better than me. There is no doubt, there is no discussion on that, right? But he cannot confirm, only the judge should confirm. Correct. When he say 80% chances, that means indirectly he is telling there is a 20% chance to lose. Correct. There is a 20% chance to lose it. That's why if you say 80% is chances to win, correct, I agree, there is no need of provision. But there is a need of contingent liability. You must disclose the contingent liability in your financial statements. In the financial statement notes, you are supposed to disclose it. Yes. Consider the risks and uncertainties involved. because it is of uncertainty. Correct. Risks and uncertainty means consider the probabilities. That's all. Probabilities you take into account while measuring what? While measuring the provision. That is the first one. Next. Sir, you are telling you measure it. It is an estimation. Yeah, it is an estimation. Are there any methods? Are there any methods to measure it, sir? Yeah, are there any methods? Yes, my dear. Standard has suggested two methods for measurement. Okay. One is weighted average of all possible outcomes. Weighted average of all possible outcomes, it is called as expected value. It is called as expected value. You must remember this, because in exam, sometimes he will use the word expected value. He will use the word expected value. That is nothing but weighted average of all probabilities. Weighted average of all probabilities. Okay, na? Right. See, a simple example I'll try to give it to you. You will understand it. Yeah, sir, I am making a provision for warranty. Okay, nice, sir. When I am making a provision for warranty, then, sir, what all kinds of, warranty means, somebody will give a mobile to you. Sir, your mobile is not working. Replace it. Bas. One is like replacement of mobile can happen. Second is what? Only one part replacement. Okay, camera is not working, screen is not working, inside some RAM is not working, something like that. That also can be possible. 3 is just service. Service in the sense they want to put a new part, they want to put the entire give. Just they will software may updation. That's it. Service kind of thing they will do it. Correct. So what is the possibility of full replacement? What is the possibility of part replacement? What is the possibility of service? What is the possibility that there is no, what is that, no complaint only? Yes, all are possible. Correct, na, sir? This will be some 2%, sir. This will be somewhere like say 25%, sir. This will be, sir, approximately 10 more percentage. This will be balance percentage. Yes, under each circumstance, what is the expected amount you are going to incur? Right? You multiply it. Multiplied result will come, na? 2% of that X money, 25% of Y money, 10% of that money. Correct, na? Here anyhow 0 I will be incurring. Right? Yeah, you calculate it. That number is going to be correct, na? That number is going to be your what? Expected value. That is, for that amount you are supposed to make a provision. And there is one more method, single most likely outcome we said. What is that we said? Single most likely outcome. Yeah, this you can apply, na? Where you can apply? Where the outcome is equal to yes or no. What did I say? Where the outcome is yes or no. Yeah, yes or no means, example, there is a legal case. Best example, suitable example will be for legal case. Yeah, in case of legal case, what will be happening, my dear? In case of legal case, what will happen? Whether you win the case or lose the case. Win or lose. Correct. Under that circumstance, yeah, you are supposed to apply single most likely outcome. Listen, example. Right. Say, suppose you win the case. Win the case, 0 you will be paying it. Sir, I may be losing the case. I may be losing means I will be paying the money. That comes to 10 crore rupees of money. Excellent. Sir, losing the case is equal to 20%, sir. Otherwise, there is 80% chance for losing. Okay, that means 20% chances for winning. Correct. But when I say it is a single most likely outcome, na? Right? The information will be given by the examiner. That is okay. That is his job. It is to confuse you. Right? 80%, 20% is not necessary for computation of liability. You said you will lose it. Lose means I will pay. That's all. Probabilities in this case, what I am trying to tell you indirectly or directly, boss, you are supposed to not consider the probabilities for measuring. You are not supposed to consider the probabilities for measurement of provision amount. You are not supposed to consider. Okay. Next, sir, out of these two methods, which one I should pick? Is it my choice? No, my dear. Actually, there is no free choice. There is no free choice. You cannot pick whatever you want. You are supposed to see what is suitable. That method only you are supposed to follow. It is not at your choice. In the sense, what I'll close eyes and pick, sir. No, not accepted. It is not accepted. Okay. Next, review provisions. Yes, review the provision. What are you supposed to do today? Yes, as on 31st March. today as on 31st March, last year I made a provision for X money, agreed. On 31st March, you have to relook at it. What are you supposed to do? You are supposed to relook at it. Relook at it for what? Is that the same amount? Am I liable? Correct. No, sir. That is no more liability, sir. Then reverse the provision. Sir, last year it is a contingent liability, but current year it is what? It is a liability, sir. Then make a provision for it now at least. Got it? Last year it is a contingent asset, sir. Now it is an asset exactly. It is receivable. There is a virtual certainty. Last year you showed as a contingent asset. Now it is an asset. So recognize the asset right now in the balance sheet. Right. That's what we say. Review your. Got my point? Review the provision, contingent asset, contingent liability, and every balance sheet date. That is what we are saying. If required, change it. If not, you reverse it. That is what we discussed. Yeah. Next, this is the important and crucial thing. Your provision must be what, my dear? Your provision must be always discounted for. But listen, it should consider the time value of money. When I say time value of money, my dear friend, when I say time value of money, that means what? Sir, which is payable within 1 year, right? Discounting is not required. If it is payable within 1 year, discounting is not required. If it is payable within 1 year, discounting is not required. Is it clear? Yeah. Which is expected to be paid after 1 year? Yes. If which is expected to be paid after 1 year, yes, please make a provision for it. That is one. Next, one more sentence, what they say. Correct, sir, you will tell present value and etc. What is the rate? What is the rate? At what rate am I supposed to discount it? Yeah, what the standard says, it should be before tax rate. Pre-tax rate. Before tax rate, you understand, right? Before tax rate, it should consider the time value of money. You should consider time value of money for your company. Time value of money. Where will you get the PDF? No, you don't get I cannot share it. It is a part of my text. Yeah, this is part of quick revision fast track chart book. It is a published book available in the market. Okay, right. We cannot share this, my dear. It is a published material. If you're interested, you can buy it. It is available in Amazon and everywhere. Okay, right. Sorry, come back. Yeah. Rate of discount. What is the rate of discount? Rate of discount, I said before tax rate. Yeah, what is that? It is before tax rate. And it should affect the time value of money. When I say time value of money, if no information is given, we'll generally go by Government of India bond yield rate. Government of India bond yield rate will apply. Which one will apply? Government of India bond yield rate will apply. But is that my time value of money, sir? Not necessary. At least in that, not necessary. You can apply your cost of capital as well. Yeah. In the absence of information, we'll go by Government of India bond yield rate. Right. If in the question cost of capital is given, yeah, that is more suitable. I agree to it. We'll go with cost of capital. Got it? That rate you should use. And again, which is risk specific to the liability. That is one more word they are using. What is the word they are using? Risk specific to the liability, not to the risk specific to the entity, only risk specific to the liability they are using it. Getting my point? Right. Means what? What is the certainty? Correct. Certainty means I'll make a provision for 1 lakh. Okay. I feel that yeah, I make a provision, present value 1 lakh rupees aa gaya. Oh, super. But still I am expecting maybe some 10% more there is a possibility. You understood? Risk specific to the liability. I wrote 1 lakh, but I feel 10 more percentage extra provision may be incurred. Expenditure may be incurred in the future. Then what we'll say, Arey boss, you are expecting 10% extra. So then make 1 lakh plus 10%, that is equal to 1,10,000 rupees ka provision ka karo yaar. That's all. You're supposed to make 1,10,000 rupees provision. If you're saying it will be less, means cut karo. Yeah, like that there was a question actually in GFRS. That's it. Very simple, very easily answerable actually speaking. Right. I said Government of India bond rate and adjust with any risk right? Or you can use cost of capital rate also, you can use it. Next one question, sir, provision will be credited. Yeah, we'll say to provision so and so, super. But what are we supposed to do with respect to debit? Debit, shall I debit the expenditure or shall I debit the PPE account? Correct na? Yeah. Now one answer, simple answer. Is that provision directly attributable to? Is that provision directly attributable to what? Directly attributable to a PPE na? If you say yes, then debit PPE account. No sir, it is not with respect to PPE. Example, warranty provision. Warranty provision is with respect to sale of goods. Correct? So it is not with respect to a PPE. If it is with respect to sale of goods, then charge it to P&L. That's all. Warranty expenses account, debit to provision for warranty. Yeah. No sir, I'm making a provision with respect to restoration or dismantling or decommission of a machine. Oh, it is with respect to machine. Then machine account debit to provision for restoration you are supposed to do. So I hope you got it. What did I say? Is that provision is directly attributable or is with respect to a PPE, then capitalize with the PPE, or it is not with respect to PPE, then charge the expenses to P&L. Okay, right, that is what we said. Directly attributable, yes, debit PPE. Not directly attributable, then debit expenditure in the profit and loss. Yeah. Next, whatever the provision you made, whatever the provision you made in the last year, can that undergo a change? Yeah, correct na? I may say, sir, 1 lakh rupees it will cost me for dismantling or decommission. Correct? I thought 1 lakh will be incurred. Yeah, that is 1 year before. After a year, now when I am re-looking at it, after a year when I am re-looking at it, I got to know what you got to know, my dear. No, it's 1 lakh rupees will not be sufficient. 1,30,000 rupees will be sufficient. Correct? Then isn't it 30,000 rupees extra are you supposed to make a provision? Yes. And not only 30,000, not exactly 30,000, 30,000 rupees you are supposed to discount for. Yes, discount for that. Now sir, okay sir, I will discount for, I will add the provision. Now tell me debit what, credit what? Correct now? Tell me debit what, credit what? Credit is provision, debit is what? Debit means first you should answer me, array boss, in the last, I mean when you are initially making the provision, have you capitalized PPE or have you charged it to P&L? Correct na? No sir, initially na sir, initially I have capitalized to PPE, now also capitalized to PPE. No sir, initially charge it to P&L. Now there is a change in provision, now also change it to P&L. Charge it to P&L. Same accounting will happen, no change, right? And change in the provision may be because of what? Change in the provision can be because of what is that? Because of discounting rate changes. Yeah, discounting rate, it's given here. See, change in the discounting rate possible. If it is because of, correct now, earlier I said 10% is my discounting rate. Now discounting rate has become 12%. Possible. Or 2% increase is there. Yes, that effect should be given in the finance cost. Yeah, finance cost. Correct now. When you are discounting it for the purpose of unwinding means reversal of discounting. For the purpose of reversal of discounting, we will be debiting what? Finance cost account is going to be debited. Finance cost account is going to be debited. Here also, if there is a change in the discounting rate, due to the change in discounting rate, there is a change in the total amount of provision, then our difference amount should be given effect. It should be given effect to what? It should be given effect to finance cost. Okay, next topic number 2. Yeah, this is topic number 2. What is your topic number 2? That is contingent liability. Yeah, contingent liability. With respect to contingent liability, there are 2 definitions. Yeah, whichever you satisfy, then it is a contingent liability. Done. What is that contingent liability? First one, it says it is a possible obligation. Kya bol rahe? Possible, they are telling. See, look at the word, the beauty of it. They do not use the word present obligation. They do not use the word probable also. They said possible. When I say possible means what? May or may not. Correct na? Possible means may or may not. Right. It is not with certainty. Yeah, it may happen, may not happen. Arising from the past events, existence is confirmed by occurrence or non-occurrence of one or more future event which is not under the control of the entity. Yes. Say legal case. Yeah, best example is legal case. Right? Do you know what is going to happen? I don't know, sir. It depends on future transaction. Done. That is legal case. Right. At the same time, there is one more second definition. What do you say? Second definition is somewhat different. Yeah, it is a present obligation arising from past event. The present obligation arising from past event means first condition of provision satisfied. No. Yeah, you satisfied. So shall I make a provision? Sorry, sir, I cannot make it. Why? Sir, provision के लिए 3 conditions are supposed to be satisfied. Yeah, to recognize a provision, you have to satisfy 3 conditions, out of which first condition satisfied, the other 2 conditions are not satisfied. What are the other 2 conditions? That is, sir, say example, someone filed a case against the company. Excellent. Right. We asked the lawyer, sir, what is the position? Will we win or will we lose? Sir, there is some testing is supposed to be done. One report has to come from the government. People will test it. Evaluation will be done. Afterwards only I can tell you. Till that time I don't tell you. So tell me, what is your obligation to pay? No, I don't know. It depends. Correct, na? Right. Is it probable to pay out? It is doubtful. Not probable. Oh, so that means second condition is not satisfied. Next, can you tell me at least how much could be the provision amount? Can you measure the amount reliably? That is also doubt, sir. I don't know. When you say I don't know, then at least you show it as a contingent liability. Contingent liability is what, my dear? In simple words, contingent liability is nothing but a caution. Kya bola? Caution. Correct, na? Suppose some GST department send a demand notice of 100 crore rupees. Hey, Ravi Kanth, come and pay 100 crore. Right. I am telling, no, I don't pay. I'll take my lawyer. Lawyer is saying, pakka we will win, yaar. Pakka we will win karke lawyer is telling. I also agree. He showed me the provision. I also read it. I agree to it. I'm very sure we are very sure that we are going to win the case. Correct. But still, yeah, you will win the case. But lawyer is not God. You are also not God. Yeah, we don't know what is going to happen in the future. Correct. We believe it. Agree. That's why you don't want to record the provision. Agreed. At least give information to the members here. Correct. Now you should not give a surprise. Now suppose you lost the case. Next year judgment came. Now what do you go and tell the people? Hey, surprise, we lost the case. Now we are closing the company. Can you say that? Isn't it cheating? That's all. So at least it's a minimum courtesy to the company. It is a caution to be given to the members or the users of financial statements. Boss, this is what happening. They said they filed a case. We are saying we are not agreeing to it. Yeah, we have number of proofs wherein that's why we are depending upon that and we are not making a provision. But for your information, contingent liability I am disclosing. This makes sense. This makes sense. That sense contingent liability ka. Correct. No. Are we liable on 31st March? No, sir. No, that's why no recognition of provision. But what are you supposed to do? Only disclose it in the notes. Just disclose it in the notes to financial statements. Correct. If outflow is remote, sir, guarantee we don't pay. Guarantee when you say it's okay. I mean remote, very remote means, what do you mean by remote? Remote means less than 10% chance. Remote means what? Less than 10% of chance. This information is given in the first initial pages of the book. Okay, remote is what, probable is what, possible is what, that basic things I have already provided. It's okay, doesn't matter. Yeah, if the outflow is remote, kya bola? If the outflow is equal to remote, then there is no disclosure is required. No disclosure is required, right? And next point, what I say, contingent asset. Yeah, with respect to contingent asset, definition is very simple. If you learn contingent liability ke liye, what is that? Possible obligation you write. Correct na? In the place of obligation you remove it and you write only that asset, possible asset, and continue the rest of the things you continue. That is possible asset arising from the past events, existence of which will be confirmed by occurrence or non-occurrence of one or more future event. Then yes, it is a contingent asset. Yeah, listen carefully. Contingent asset is again possible asset. Yeah, let me write it here in a different, simple. Yeah, when I say contingent asset, question you should ask me, sir, is it possible? Is it possible? Yes, sir, it is possible, sir. Okay. No, it is a probable, sir. Probable means there is more than 50% chance to win the case. I mean, you filed a case against another party. What is the example? We are asking for compensation. We are asking for compensation. We are filing a case against the other party. Okay, probable and virtually certain. Yeah, virtually certain. Yes, virtual certainty. Right. If it is possible, if it is possible, no disclosure, no recognition. Nothing is going to happen. If it is possible, just leave it. Possible means ignore it. You shouldn't bring into books of accounts or financial statements. Yeah. No, sir, it is probable, sir. Probable to only disclose. Disclose where, sir? In the board of directors or in the notes, sir? In accounting standards, may will say board of directors report, but in Ind AS may we don't say board. I mean, Ind AS doesn't talk about board of directors report at all. Ind AS directly says, if you are feeling, what is that? Board report is that's their choice. That is their letter. Why will I say you write this? You write. Do not write it. Make your bolna. Correct. Now why should I say that? That's why I don't say it. That's why standard doesn't talk about board of directors report. We say it should be provided in the notes. In accounting standard, it says board of directors report. Okay, na? When it is probable. Yeah. Actually speaking, point to understand and analyze. Point to understand and analyze. Generally, for an asset, generally an asset, when do you recognize asset? When there is a probable future economic benefit inflow. To recognize any other asset, probable is sufficient. But with respect to contingent asset, probable is not sufficient. We need virtual certainty because it is with something which may come, may not come. Yeah, we are following bit conservative. Let us recognize the asset. When you are recognizing asset, compensation means income, na? Asset account debit, income account credit. So let us record it when there is a certainty. That's why we say, yeah, when there is a virtual certainty is available, recognize the asset. Now I said asset, it is not contingent asset. Yeah, maybe last year I don't have virtual certainty. Last year I have disclosed it because it was probable, told by my lawyer. Current year already judgment came that I won the case and the other party has to pay me. Now say receivable account debit to income because judgment has come. Pakka, certain, correct na? No risk, everything is perfect. Then recognize the asset. That is what we say. Right. Next topic is reimbursement. What do you mean by reimbursement? Simple. We spent money on behalf of somebody. Yeah, what did I say? We spent money on behalf of somebody. Right. Suppose I incurred, say example, for an academy purpose, I went to Delhi, example. Okay. I went to Delhi. I stayed in hotel. Right. Hotel mein I stayed it. Say this is the balance sheet. Yeah, I say hotel expenses payable to hotel, some X number I'll say. Now, can I say an academy receivable from an academy? Can I say the same number? Can I keep it here? You can keep this as an asset reimbursable from an academy only when an academy told the same sentence in the agreement between me and an academy. Got it? Yeah, if they were silent in the agreement, then you shouldn't record it. Because if you record it, tomorrow an academy responsible personnel will tell, Ravi, why are you asking? When did we mention this? Have I told you orally? Have you told you in written? Nahi bola na Ravi. How can you ask me like that? If he says like that, you understood my point. Out. Money will not come. That's the reason. Unless until there is a word, at least oral or written or some confirmation to hai to na, then only you recognize it. That's why they say reimbursable asset, boss, you recognize it only when virtual certainty exists. Correct. And again, the important point here, na, even suppose, yes sir, I spent 100 sir, an academy people told 80 will pay money. Okay sir, thank you. But you have to recognize liability separate, 80 separate. You should not set off. Offsetting, netting off, not permitted. Why? Why means me, Ravi Kanth, middleman, I have an obligation to pay to the hotel. I have a right to receive from an academy. These two are two different things. These two are two different transactions with two different parties. So you shouldn't book it in net. You should not book it in net. Got my point? But in the profit and loss you can say, sir, 100 minus 80, 100 minus 80, presentation in the P&L you can net it off, because end of the day my hotel expense, I have to bear 20, or 20 I can take it to P&L. That is permitted, but not balance sheet presentation should be separate only. Next. Yeah, next concept is onerous contract. Onerous contract. I'll explain you this 5 minutes perfectly. The restructuring program is the same as your accounting standard 29. Okay, so that we can, you can read it on your own. Yeah, onerous contract. What do you mean by onerous? Onerous contract means this is unavoidable cost. Yeah. If you remember, in accounting standard 7, mein, students must have read, when there is an expected loss, kya bola? When there is an expected loss from any contract, like expected loss aa gaya to recognize it immediately, irrespective of the percentage of completion, irrespective whether you started the project or not. Correct na? Irrespective of what is that, other income, other profits from the same contractee, irrespective of all that, you have to book it. Same sentence here, you have to book the loss for what? For this contract. Which contracts are? These are binding contracts, non-cancelable binding contracts. It's mentioned non-cancelable contract. So suppose if I continue the contract, I will be making 10 lakh rupees of loss. Okay, if I cancel the contract, boss, I want bye-bye. If I want to say, if you want to say bye-bye, then the agreement says, Ravi, first you pay 5 lakh rupees and then cancel the contract. What is it saying? Ravi, pay 5 lakh and cancel it. Got it? Then now what do you do? Any person, any company, human or non-human, obviously will select which option? Whichever is lower loss only will pick. Correct. Now which is lower loss in my example? Obviously 5 lakh rupees is lower. Correct na? So that means if 5 lakh rupees to pakka you are going to bear it. Do you have a way to skip it? No way to skip. That's why we say, standard says, Arey boss, you make a provision. Yes, you make a provision for 5 lakh rupees immediately 5 lakh ko provision karo. Correct na? When are you going to pay this penalty? Sir, within 1 year. Okay, within 1 year means no discounting. No, sir, I will be paying after 3 years, sir. Oh yes, the provision, whenever I say discount rules will be discount rules. Provision, whenever I say discount rule is discount rule. Getting my point? You have to discount for the same. Yeah, so that's what we have written here. Record provision for cost of fulfilling the contract. Means if you continue the fulfilling the contract, means complete the contract. If you complete the contract, 10 lakh rupees of loss. And compensation or penalty if it is cancelled, whichever is lower. Yes, for that amount you are supposed to make a provision. Yeah, we have given something like contract revenue, A7 ka small example. Same thing here, even in Ind AS 115 mein same concept is there. Contract revenue is 80,000, expected cost to complete everything, correct? Now 1,40,000. Yeah, exactly, you are supposed to make a provision. So loan amount, 60,000, penalty will be 30,000. So which is 60 or 30? 30 is the cheaper one, so we'll make a provision for. Done. And as I said, restructuring provision bola. Correct na? Restructuring provision, restructuring means what? Restructuring like merger, demerger, okay, expansion of your business, or shutdown of one division or factory, okay, new product launch. Yeah, that is, anything, anyways, or location change. These are all part and parcel of restructure. Restructure is a finance term. Okay, yeah, it has very broad and definition, very big definition is there. Okay, yeah, so if you are doing any restructure, because of restructure, what will happen? Whatever the provision comes, 99.9% the provisions, whatever the provisions that are going to come up, these are constructive provisions. These are which provisions, my dear? Constructive provisions. These are not legal, these are not contractual. Constructive, self-binding. because I will be promising the employees. What I will be promising? Arey boss, you guys are leaving. Correct na? Arey, take 3 months salary le lo yaar. I am promising. That's it. Because I promise, and a valid expectation will be created in the minds of the guys. Correct na? So then yes, you should make a provision. Again, for restructuring provision, separate conditions are not there, my dear friend. It is all same conditions are there. Okay, same conditions are there. Hope you understood. Right, that's it. I am through with Ind AS 37. A quick revision. This was for 1 hour. Yeah, next standard starts Ind AS 20. This is my next class. I mean 1 hour, 12 to 1 o'clock. 12 to 1 we'll discuss on Ind AS 20 on accounting for government grants. See you there. Thank you.